And Bloomberg's John Erlichman joins me now. So yeah, let's talk about these rates, John. And we mentioned the war. How much of this is because of that war?
You know, it's really a whole combination of things, Bev, right now. Absolutely, the invasion of Ukraine has further complicated a whole bunch of issues. Certainly, you've seen that in commodity prices and obviously oil. A lot of Canadians right now paying more at the pump. But these inflation numbers, which were expected to be high and ended up being even higher than what was expected on Bay Street, just highlighting all of the challenges that Canadian consumers are facing right now, whether it's the gas pump, whether it is the grocery store, whether you're just buying things that you might need like furniture, or whether, as many of us get out and maybe start traveling again, the reality that airfares and hotel costs are skyrocketing. And obviously, it's not just a Canada issue right now, but the challenge is going to be on the economic front because central banks like our Bank of Canada are going to try to fight this inflation with higher rates. And the economic path ahead, while still positive for the year, has been cooled a little bit, in part because of that situation in Ukraine and the COVID situation in China. And now you've got our Bank of Canada that's going to have to navigate how hard they want to hit us with rates, how aggressive they want to be when there are some signs of possible cooling for the economy down the road.
And in terms of the Bank of Canada and the rate hike last week, we're expecting more as a result, and this was before this news today. What does the Bank of Canada look at in terms of a time frame as to, when and how the new rates or the hike in the rate will affect the economy?
Well, I think they've had to speed up their time frame here, Bev, because coming out of the pandemic, a lot of us thought that some of these price spikes that we had seen would be temporary. You know, for example, if we literally are shutting down business during a pandemic and then getting things back up and running, a normal cost of business might be higher prices. But we've just seen some of these lingering impacts. They're going to be watching closely some of the key variables out there, things like wage pressures, too. I mean, obviously, if you're paying more, you want to get paid more yourself. But those prices don't go away too easily. It's hard to take back, for example, a raise. And so the bank is really going to move at an aggressive clip. You referenced that Bank of Canada move last week. We're now on Bay Street expecting we could see another half-point hike in the near future. So that is a consideration to watch for. As for some of the other factors that they'll be watching, Bev, you would have to think that maybe if things get resolved in the interim with the geopolitical issues, that could bring down oil prices. But there are a lot of moving parts, and this was definitely an eye-popping number to see the highest prices since 1991.
Yeah, it sure is. And what it would mean then, in terms of the war in Ukraine, even if there was a peaceful solution in the near term, which it doesn't look like, but we'd probably be looking at and we were just looking at the consumer price index numbers as you were speaking there, we're probably in that area for quite some time, maybe even a year.
Yeah, I mean, at least in the commodity markets where things have been, complicated because certainly the Canadian economy benefits from these higher commodity prices, and that actually does soften the economic blow for Canada. But for people who are trying to figure out what happens with things like gas prices, if there is a coordinated effort to move away from Russian energy supply, for example, which for Europe, they're definitely thinking about it. If they move away from that, though, how do you make up that gap? And that is one of the reasons why people who have been watching oil prices say there could be these elevated prices for a while. And then when you look at the grocery bills, I mean, think about the situation with wheat and cereal prices. I mean, these are issues that don't get solved overnight either, Bev.
Okay. John Erlichman, thanks for walking us through all this. Appreciate it.